Today, we're delving into the fascinating concept of a U.S. sovereign wealth fund. Starting with its strengths, it's clear the massive asset base the U.S. commands could be pivotal. Could you elucidate how this asset base serves as an effective leverage?
Absolutely, having such profound liquid and non-liquid assets allows for significant monetization strategies. For instance, just consider the federal land and natural resources. Effectively managed, these could rival the returns we've seen from funds like Norway's government pension fund Global.
Fascinating. However, with strengths also come weaknesses. The rapid structuring of this fund poses potential risks. Do you think this volatility might deter the fund's initial success?
There's certainly a concern there. The aggressive timeline of just 12 months could lead to hasty decisions. Anecdotally, we saw similar volatility in Kazakhstan's fund because of its quick establishment, which led to early financial missteps.
Addressing these risks seems crucial. Considering these factors, how might the experienced leadership of Scott Bessent and Howard Lutnick bring stability?
Their financial acumen is invaluable, potentially mitigating inherent risks. Howard's experience with Cantor Fitzgerald handling crisis situations strengthens confidence in navigating this complex setup.
Let's shift our focus to opportunities now. A key area is infrastructure investment. How might profits from this fund revitalize U.S. infrastructure?
This could truly be transformative. The current infrastructure bill alone won't meet modernization needs, but with sovereign wealth fund profits, we could see significant advancements in public transportation, broadband access, and green energy.
That's promising indeed. However, foreign asset dependency raises geopolitical concerns. How might strategic acquisitions navigate these waters?
Good question. Strategic partnerships with firms in tech and real estate can buffer against geopolitics. However, diversification is crucial. For example, focusing solely on tech partners like TikTok enhances risks, much like the UK's Huawei situation.
Moving forward, how might we achieve such diversification sustainably?
Part of the strategy could involve expanding into emerging sectors like AI and renewable energy. By balancing investments, risks get distributed, providing a stable long-term growth trajectory.
Transitioning to threats, geopolitical tensions always loom large. Could you illustrate how these might affect fund performance?
Certainly, geopolitical shifts can distort markets and economic alignments, such as the tariffs that weighed heavily on China-US relations. A sovereign fund could face similar turbulence, harming return rates.
Given this, what are the mechanisms in place to counteract such volatility?
Implementing robust risk management is essential. Look towards risk modeling adapted by UAE's ADIA, which uses predictive analytics to foresee market fluctuations, thus optimizing portfolios preemptively.
Yet, legal challenges might complicate this framework. How should these hurdles be maneuvered?
Navigating legal landscapes requires agile frameworks with policies that flex to regulatory requirements. This agility can mitigate constraints, evidenced by adaptations in Singapore's GIC with changing regulations.
Now let's discuss the MOST analysis, particularly the fund's mission. How does it aim to enhance the wealth of U.S. citizens through strategic investments?
The mission hinges on deploying resources effectively, emphasizing returns that loop back into the economy. This mirrors the economic uplift seen in countries like Malaysia, where sovereign funds fund higher education and public health care.
How crucial is transparency in achieving these objectives?
Transparency is paramount. Creating comprehensive public disclosure policies fosters trust, much like Norway's GPFG, which reports detailed annual results to maintain civic confidence. Hypothetically speaking, if leveraged correctly, it could reduce national debt, lower taxes, and fund innovation. The domino effect could position the U.S. as a leader in not just governance but global economic stability.